My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. Other people want to make friends. I'm just trying to make you a little money. My job is not just to entertain, but to educate, teach, and talk about days like today where it looked great and then just gives it all up. So call me at 1-800-743-CBC or tweet me at Jim Cramer. When you throw enough negatives at this market, you get a positive. If the trucking companies see lower orders and chemical companies see a slowing plastics business and the railroads have declining cargoes, the Fed may just give us a rate hike stay of execution. That's why the average didn't get hit particularly hard today in the face of some truly bad quarters. Dow slipping 90 points, S&P declining 0.80%, Nasdaq losing 0.61%. There's so little demand for semiconductors, for instance, that the chip makers are furiously cutting orders for capital equipment, shaving off about $20 billion worth of wafer fabrication machinery in just light speed time. And see, once that capacity gets taken away, we'll eventually have a dearth of chips, and that's how the semis bottom. That was one of today's narratives. At the same time, the beaten down IBM just gave us an incredibly bullish update on its hybrid cloud strategy, giving new life to everything that goes into the cloud or web services. And that had become one of the most despised groups out of there.
The House of
People hated it.
Pain.
All of these things happened in the last 24 hours, and when taken together, they gave hope to the bulls, who think the Fed may pause after hitting us with the next 75 basis points hike, because things have gotten precarious for vast swaths of the economy. Now, I'm not sure. I still think they'll hit us with two of them. But understand, you could build a thesis from what I'm saying that they'll only hit us with one of them. Now, you could argue this corner of the market went higher because interest rates were stable, but they weren't today. Interest rates were higher. They went up. You could say this morning's jobless claim skyrocketed, but they actually went down. No Fed officials suddenly changed their tune. They were their usual hawkish selves, calling for endless rate hikes, like Endless Love, that dynamite tune sung by the dynamic duo of Diana Ross and Lionel Richie. While we finished the day down, stocks were up in the morning, and I think that temporary rally was because we're finally getting undeniable evidence that businesses are being hurt by the Fed rate hikes. And believe it or not, that's what we're looking for. Remember, the Fed's not going to stop tightening until we see real pain.
That was easy.
Of course, you should never underestimate the market's ability to confuse us and lead us astray. I cobbled together the theory that I just gave you while working on the Investing Club's morning meeting at 10:20 with Jeff Marks, our research director. I was being tortured at the moment by the fact that Lam Research, the gigantic semiconductor equipment maker, could see its stock plummet $15 on the possibility of losing $2 billion worth of orders from China, then rally $37 on the same piece of news. I expounded upon it in desperation mode, trying to rationalize the move. And then I figured it out. The logic of the wafer fabrication business is always backwards. When Lam's getting big orders, people anticipate that the cycle's peaking. And you know what they do then when the cycle's peaking? Sell, 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 sell. Once the orders plummet, the bargain hunters come in, anticipating a new cycle once chips are in short supply again.
All aboard!
And that's the ticket with Lam. It's also why Micron can keep climbing, because the less semiconductor equipment their competitors buy, the more likely it is that they actually get some pricing power again in the not-too-distant future. The inventories get washed out, and it's happening faster than we think. There's too much inventory, though, in the entire semiconductor supply chain, including from Cramer faves, Nvidia, and AMD, and I still like them. But if Lam's having more than $2 billion canceled, and a lot of that, of course, is because of China, of the tension with China, that means the existing inventory will be eaten up faster than you and I think. I couldn't figure out the rally in the cloud stocks, which have been savaged of late, at least not until I read the IBM conference call, where they talked about how well their hybrid cloud strategy is going on. More on that later. For now, what matters is that it's great news for both Microsoft's Azure business and Amazon Web Services, which are crucial to the entire tech food chain. They'd just been slagged the day before by a different piece of research. Now, this kind of analysis doesn't always work immediately. Not all bad news is being treated as good news. The trucking and train companies are doing badly, and their stocks got slammed. But I think we'll eventually see this logic play out as we get more disappointments from the transports. The important thing is freight rates are coming down, which means the Fed's making progress in its war on inflation. And that, by the way, is the watchword of this moment. Progress. Until this week, we hadn't seen all that much progress, if any, from the Fed's tightening cycle. The relentless rate hikes have produced the highest mortgage rates in 22 years, but it still isn't really putting as much of a dent in the housing market as you think. Although some prospective home buyers are indeed pulling back, others have surfaced with cash and are ready to buy when they want to. Still, though, now that mortgage rates have soared, there will eventually be progress on that front, too. I think we'll soon see potential sellers start breaking price, if only to make their houses more affordable in light of sky-high rates. That would be huge for the Fed. That's a major victory for a team that is just hungering for a win. We haven't seen wages cool down at the trucking companies yet. However, as business slows, nobody's going to be talking about a trucker shortage. Another win for the Fed, as wage inflation is indeed their true nemesis. Now, I want to step back and deal with the reality of the stock market for a moment, because it's very painful for a lot of people. I see it in my Twitter mentions. People are very angry at me. It's really pretty amazing, because look, I'm out here doing my best, and that doesn't necessarily mean I get it right, but the anger may be misdirected. You see, as long as the Fed remains in rate hike mode, owning most stocks is going to be an uphill battle. And if it's too hard for you, you should sell them. I mean that. See, there's still way too much hope in the market. Hope that companies will, I don't know, somehow be unscathed by the Fed and make it to the other side with earnings intact. Just tonight, Snap reported and delivered still one more disappointment that is taking down all the internet stocks, including some profitable, very good companies. They will be tomorrow's yellow stain incident to Kane Mutiny, this show. I keep telling you, the only ones that can pull it off are the classic recession-proof stocks. That means something like Procter & Gamble or Johnson & Johnson. The fact that those are actually going down is a gift. These companies are already seeing their input costs start to come down, and it's coming down big thanks to the Fed's war on inflation. They are well off their highs and have nothing to do with the likes of the snaps, which turned out to be disastrous. Just these pieces of paper created during an insane period where everybody thought that everything was a company, including things that aren't. It's possible some high-growth stocks reach the equivalent of value status, like Salesforce, which is joining up with Starboard Value. Notice I say joining up and not fighting, an activist hedge fund to cut costs. That can cause a bottom, too. But for some, like the aforementioned Snap, I just don't know where the value proposition kicks in. Unfortunately, there are still way too many areas where the Fed is losing. For instance, today we learned that the average household is spending $445 per month more than last year for pretty much the same products. That is unacceptable to you, to me, and to the Fed. But rolling back those price increases is easier said than done. Consider the oils. They won't give up their inflated prices, especially now that we know the president intends to buy back what has been sold from the Strategic Petroleum Reserve when oil hits somewhere between 67 and 72. All right, I got to tell you, I'm not a political guy, but that was crazy. If I were president and I wanted my party to stay in power, I wouldn't put a floor under the price of gasoline. Meanwhile, most industrials haven't been truly hit yet. Same goes for the restaurants. While the expensive money-losing tech stocks have all been wrecked, there could be more pain to come because there's no reason they can't go lower. Same goes with nearly everything that came public in the past few years, especially the junk health cares or the electric vehicle plays. The Fed wants Bitcoin smashed. It wants Ethereum slain. Get that in your heads. They want the supermarkets torn asunder with rollbacks in all sorts of food and sundries. And yes, they do want your stock portfolio lower so you don't have as much purchasing power. It won't happen overnight, which is why all these Fed officials can't stop, won't stop. Bottom line, we're now finally getting progress in the war on inflation. Progress is this market's most important product. Hey, why don't we go to Derek to start the questions in North Carolina? Derek.
Hey, Jim Cramer, how you doing today?
Jimmy Chill is doing fine. How about you?
Pretty good. Greetings from Charlotte, the Queen City. Just wanted
I always thought of it as the Queen City. Dave Tepper's trying to change that team. He's going to win. Go ahead.
All right, well...
he is. Tepper always win. He was my boss. He's the greatest. Go ahead. I'm sorry.
All right, so I'm looking at... I'm looking at Best Buy. They had a solid 2 days of gains. Then Evercore did their downgrade, and then they're having 2 days, I guess, heading towards 3 days of losses. The current dividend yield is like 5.52. It's higher than the market bottom, 25%. And it's been relatively stable and increasing for the past 10 years. And, of course, today they finished down 1.4 at 62.85. So, with that being said, do you think I should move on this one?
Okay, look, I think Corey Barry, whom I always welcome on the show, is doing a phenomenal job. When you speak to Jensen Huang, who is the CEO of the amazing Nvidia, there is a new gaming cycle coming. They have a terrific tech team that is very good for your IT at home. I am a believer in Corey Barry. Will they hate me on Twitter if it goes down 50 cents? Pound sand. May I speak to John in New Jersey, please, John?
Hello, Jim. This is John, and I'm a first-time caller, but a 15-year member of your clubs.
Yes! Now, this is what I want. This man knows that I'm trying to teach. It is hard. I go home at night. My wife says, why are you having that mezcal? I said, because it tastes good. Go ahead.
Well, it's all worth it to me because I've learned so much from you, and even something from your mother when she once said we should sometimes take our winnings off the table and go buy a nice cashmere sweater. So
Jimmy, let's get out of the casino and go buy a cashmere sweater. You betcha.
Exactly. So in January, I took her advice. I took half my profits, and I went and bought a nice house on a lake. And it's all thanks to you. Thanks to you and your mother.
How much do you make in your checking account? How much do you make going to the movies? How much money do you make going to the movies?
Bupkis.
Right.
So thank you, Jim. My question, I own the club stock Eli Lilly for its weight loss drug Mounjaro and the other great drugs it has in its pipeline. But I'm wondering about the another company, there's two actually, that are making weight loss drugs. One is Novo Nordisk, and I'm wondering if we should increase our weighting in the weight loss opportunity with NVO.
Well, I think Novo, I don't like other aspects of Novo's business. And remember, Lilly still doesn't have the approval for the weight loss. I think it's going to get it. And a lot of us, I'm on Lyrica. I tell everybody everything that I'm on. I own Lyrica, and it gains weight. I need this drug to take the weight off. Thank you for being a member of the club. Thank you for understanding what the heck we really do, which is teach, because that's what I'd be doing if I weren't doing the club. But there'll only be like 300 people. All right, we're finally getting progress in the war on inflation, and progress is this market's most important product. On Everybody Tonight. Big Blue flashed some big green after earnings. So what should you make of IBM now? I'll give you my take. Then after FedEx flashed a warning last quarter, is it time to reevaluate the transports? I'm digging into the sector. And could Bolero be a strike for your portfolio? I'm checking in with the CEO to get a sense of where the company's headed. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.